This was a presentation I did for a group of realtors discussing how to help home sellers that are in distressed financial situations. At the end of this, I'll share with you how you can use the Trio app to make more contacts using these scripts. I'm going to give you a PDF with this information on it, right? Number one is don't do anything. If you put your head in the sand like so many people do, okay? And this is exactly how I present it. If you put your head in the sand like so many people do and you don't do anything, the bank is just going to continue to march along. And after the trustee sale happens, somebody's going to knock on your door. And I do just like that. I'll knock on the table. I'll knock on the wall. I want to dramatize this, okay? Somebody's going to knock on your door and they're going to evict you. Now, I've had the unfortunate task of having to do that for a bank. And it's nothing worse than watching somebody get evicted and watching their kids' toys be put on the curb. And I don't want that to happen to you. Okay? I told you I had the VA account for the whole state of Colorado. I was the guy who had to show up and knock on the door and let that person know that they no longer own that home. And that if they were out in, if you take this $500 cash for keys, otherwise I'm going down and I'm evicting you, and I'm going to have to watch here as we have the sheriff show up and we unpack your house. It's a horrible, horrible experience, okay? As a child, I went through that, right? As a child, we got evicted multiple times, right? My mom didn't do a good job with the holding a job thing. I'm not very good at it either. We have that trait. So that's why I'm a realtor, because I'm unemployable. But I bring that emotion. I go to that place in my mind where I have that energy and that intensity because I truly don't want that for them. I don't want them to go through that. Unfortunately, this is what many homeowners will do. The ones that don't take my advice. This is what they'll do. Okay? There's another really important way of staging it this way, and this is getting off topic, but I'm a writer. So let me tell you a little bit about storytelling. If you go in and say something like, I'm going to save you from foreclosure, who am I in the story?
The hero.
I'm the hero. Who are you?
The victim.
The victim. Who's the villain?
Bank.
The bank. Your client is never the victim. You always have to make the client the hero. Always have to make the client the hero. So when I said that, when I said homeowners that listen to me aren't going to go through that. Homeowners that don't are going to face this dire fate. Who's the hero?
Homeowners there for choosing to go with you.
The homeowner that listens to me. Who's the victim?
The bank.
Homeowner that doesn't.
The homeowner that doesn't. And who's the villain is the bank or the economy. Okay? Don't fall into that trap of making yourself the hero. When you're the hero, you're pulling yourself away from somebody. You're separating yourself. Okay? I have a big ego. I don't know if you've noticed. It goes with me. It barely fits in most rooms. I have trouble with this. I have to consciously remind myself, I'm not the hero here. Right? Because I can't help them if it's about me. Right? It has to be, how can I make them the hero? How can I make them the hero? Okay? All right, number 2.
Real quick, so that verbiage was homeowners that choose to take my advice?
Yeah. Homeowners that, so unfortunately, this is going to happen to many homeowners that don't follow my advice. Right? So the implication is, they're the villain. They go, well, I don't want to be the villain, so how do I not be the villain? I follow your advice. It's always about that. It's always about setting them up to be the hero and not making it about us, right? Like
Story brand is great for the words to use.
Yeah, you say to somebody like, why are you behind on payments? Ooh, whys are tough questions. What happened?
What caused you? Yeah.
What caused you to fall behind on payments? Right, so it's about the occurrence of it, not about you're an idiot. Why did you do this?
it's a right brain asking for emotions, when we wanna solicit some facts and some logic, not all the emotion.
Yeah. Oh, we could change this whole class. Okay, let's stay on because I want to get through this. Okay, number 2, get caught up. You will need to pay all your past dues plus late fees, right? The bank will usually not accept partial payments. Now, why does the bank not accept partial payments? So if they're 2 months behind, the bank said, and that you say, hey, I tell you what, I have $2,000 and their payment is $2,500. The bank says, I can't accept $2,000. Why is that?
Is it part of a contract?
Close.
Because if
They'll
you
have to
actually
start
been
the
through.
process of foreclosure over if they take payment.
Yeah. If they take anything as acceptance of payment, it could elude that the bank is accepting something in violation of the foreclosure. So now they could take a full payment. So if they're 3 payments behind, March, April, May, they could take March's payment, but they can't take a partial payment. Okay?
Okay, so I heard from somebody who worked at a bank that your late fees, they cannot call you or charge interest on them. They're actually due, but they're due at the end of the loan payment. So
Yep.
she said, if you're behind, make your payment.
Yeah.
Don't pay the late fee.
Yeah, that might be true. Mhm.
They'll accrue,
Yeah.
but they can't.
Foreclose
they
over your
can't
late fee?
They can't take you to collections because of late fees.
Okay. That might be true. I don't know. Usually the late fee is not the issue. Yeah, the late fee is like $55. I don't know if they're too worried about that. So, okay. So, do you know how much you owe? These are the questions you're going to ask when you're in the like you're sitting down with them. Do you know how much you owe? Most don't. Okay. So what I do then is I ask them to contact their bank while I'm sitting there. Can you call them right now and get the full balance of what you owe? Okay. Do you have the ability to pay this today? We know they don't. We're just asking that question. Yes?
I would say, when them calling the bank, I've had problems there, in calling them. If you're calling just the regular number, they're gonna pull it up on the computer. It's not necessarily that late stuff.
Right.
Foreclosure and all those fees. Be very careful of that.
Yeah, you got to ask for the payoff amount.
Yeah.
So do you have the ability to pay this today? The reason we're asking that question is to get them to feel the severity of this, right? The reality of this. Now, sometimes it's not that much money. Sometimes they're $5,000 behind and they have a job or maybe they're like, if I can just make it till springtime, I'll put my house up on the market. So you're just trying to like kick the can. So resources, churches, nonprofits, relatives. I have called people's relatives for them. Okay? I've called people's relatives. I had one gentleman, this is a really sad story. I met him and he had just moved here from the East Coast and he was living with his family in a little trailer in the campground at Chatfield. And the mom, his wife called me actually, and she wanted to buy a house. And his credit wasn't very good, so I had him kind of cleaning his credit up while they're living in this trailer park. And he's got 2 young babies, right? And she's pregnant. She's like 8 months pregnant. We finally get her credit cleaned up, and I sell him a brand new house in Parker. This will tell you how long ago it was, for $132,000. A Melody home, 3-bedroom, 2-bath, 2-car garage, gorgeous house, gorgeous neighborhood, $132,000, right? Payments like $1,100 a month, right? Perfect. I'm like, I did my job, like awesome, great job. About a year and a half later, I get a call from him. And his name is Matt. And he calls me and he goes, Sean, I need to sell a house. And I was like, what? Like, we worked our butt off to get you in that house. Why do you want to sell? And he's like, well, I can't make the payment. So I was like, okay, I'll come out. So I go out, I meet with him. I'm pulling up, and he's got a brand new minivan. And next to the minivan is this giant F-250 quad cab lifted, and it's Barney purple. Barney purple, the ugliest truck I ever saw. And I'm like, he's got $2,000 in car payments here. Right? This is crazy. Because even back then, those trucks were $60,000, you know? That van was easily $40,000 van, a fully loaded Toyota Sienna van. I mean, it was easy $40,000 back then. And I'm like, man, we're going to sell your house. I'm like, you got these vehicles sitting out front. I'm like, why don't we get rid of these vehicles? Like, this is what's killing you. You know, your payment on this is $970 a month for that truck, right? The purple Barney truck. I hate that truck. To this day, I still hate that truck. And he goes, I need my truck to get to work. Now, when I met him, he was driving like literally a station wagon that was falling apart. It was like literally rattling apart. And he was working the same job. So I know he doesn't need this truck for his job. He was doing fine with the station wagon. I said, dude, you need to take that truck down, park it in the freaking parking lot of the bank, leave the keys on the dash and say voluntary repo, and go buy yourself a $1,000 car and keep your kids. Because now he's got 4 kids at this point. 4 kids. And he wanted to sell his house because his house went up. It went up about maybe $50,000. I don't even know if it went up that much, but a little bit. And he wanted to have money to keep his truck. Right? So sometimes you have to be like that voice of reason and be like, no, we're not selling this house. Now, I haven't heard from him in a while, so who knows what ended up happening. But okay, so I have another one where they had a trailer sitting out, just a big, like, pull-behind travel trailer sitting in the yard. And I said, well, what's the story with the trailer? And they go, oh, you know, we use that for camping. And I'm like, is it paid for? They said, yeah. I said, sell it. Sell it. Pay your mortgage payment. You buy a trailer another day. Right? I told you during the recession, I kept my Porsche. I sold it to take my kids to Disney World. Right? I didn't want to sell it. You know what I would do for that car right now? That car has gone up so much in value. It was a 76 911S. I love Porsche. Thing's through the roof right now, right? Carrera tail, red, guards red. I sold it in the recession because I told my kids I was going to take them to Disney World, and then I didn't have the money, so I sold it in February, right? When you prioritize things correctly, they'll make the right decisions, right? Or at least a better decision, okay? So in that case, they sold the trailer. They put a sign up in the yard, got like $4,000 for it, got caught up on their mortgage payment, kicked the can out, and then they were able to keep their house. So, and here's the craziest part. They still own that house today. They ended up negotiating, after that, they ended up negotiating a loan modification. Their house is at like 136th in Quebec over there, where there's that Walmart over there. It's probably a $650 house. Their payment is like $800 a month. Seriously. Yeah. And they're like getting ready to retire. They call me, they go, we want to buy this bigger house. And I'm like, why? Your payment's $800 a month. Why are you going to buy a bigger house? What are you thinking? I'm the worst realtor. I'm like the here's why you shouldn't sell realtor. Right? I'm the worst. Okay, number 3, forbearance. This is the most confused thing people don't understand. Mortgage payments are reduced or suspended for a period of time. This is really important. This could be 1 month, 3 months. It could be, it could be a year. At the end of that time, they will resume making regular payments as well as the lump sum payment or additional payments for a number of months to bring the loan current. This is what I was saying changed. Like during COVID, everybody's getting those forbearances, and all of us in the real estate industry and the mortgage industry were like, what? How are people going to be able to recoup this? Because what they did in the past is it said, okay, your forbearance is over. We gave you $6,000. Now we're going to amortize that $6,000 over 12 months, and you're going to pay that $6,000 back. Well, if you would have done that with your payments that you hadn't paid in 6 months, your payment was going to go up $1,000. But what they ended up doing is tacking it on the end of the loan, which we'd never seen before, by the way. That has never happened. Nobody ever saw that coming. Some of my friends are the top mortgage people in the industry. And we're all like, they're never going to do that. Like, who's going to manage it? How are they going to get paid interest? Who's going to put up the money with no interest payments? This is ridiculous. They're not going to do this. This doesn't even make any sense. And they did it. Crazy. They just waved a wand and said, okay, we're doing that now. It's crazy. So if you miss a payment during the forbearance period, the bank may resume the foreclosure process immediately. And this is a mistake a lot of people make. They get into a forbearance, not a loan modification. A forbearance, their payment's reduced. Let's say their payment goes from $3,000 to $1,500. They make a payment, they miss a payment, that's sale deadline. Remember that foreclosure still trugging right along. The bank says, you violated your forbearance is canceled, we're foreclosing. and you have like 45 days now. And then they call us, right? So this is why it's really important when you're talking to someone who says, I'm in forbearance, you say, okay, that's fine. Here's what I'm going to do for you. I'm going to monitor your foreclosure, and I'm going to keep you abreast on what's going on as far as the foreclosure stuff. You got to keep in contact with your bank. You've got to talk to your bank and make sure that they're doing their part. And if at any time you can't make your payment, you need to contact me, because then we're going to have to be prepared for how the bank is going to respond. Okay? Because these banks are nuts. Like, okay? If the homeowner wants to do this, the borrower wants to do this, they can contact the bank directly. They don't need us. Okay? They can contact the bank. But just say, keep me in tune of what's going on. Okay? It's almost like if you think about prospecting, you're calling people or you're generating leads, however you're doing it, and you have kind of your pipeline of people that you're kind of nurturing. You're going to have a pipeline of people that you're kind of monitoring. Like, you're from the nursing, you're not a nurse, but medical industry, right? Yeah, you're going to be watching the machines. My son is a CNA, so he's the guy who sits and watches the monitors. Okay, number 4, loan modification. So a loan modification is a permanent restructure of the loan. So anytime the terms, the rate, the mortgage, the interest rate are changed, right? So it's a long-term solution. So typically what we'll see is a forbearance for a period of time and then a loan modification. The difference between a loan modification is a client is going to have to qualify. They don't just give loan modifications. They do a full 1003. So they're going to want to see tax returns, they're going to want to see employment, they're going to want to see bank records and everything before they're going to modify the loan. Because once they modify the loan, that whole flag that they raised with the loan with the notice of election demand, that all resets, right? It's a new loan, right? So they're starting all over again, and so they're saying, okay, you violated our last agreement, but we're going to handshake on this new agreement. We're going to sign this new agreement, and we're going to start over new, okay? And this requires a documentation. So there's no such thing as a loan modification that's just over the phone. Okay? You can do a forbearance over the phone. Okay? So remember I said you have the bank and you have the servicer? The servicer can do a loan modification. So like if you're the borrower, you call the servicer, you call Quicken or Mr. Cooper, and you say, I can't make my payment in February. My wife got laid off. We're going to miss one payment. We'll get back on track in March. The servicer will handle that whole process without ever notifying the bank. I mean, they'll probably notify them, but they don't have to get the bank involved. The servicer can do that. The servicer oftentimes will just cover the interest for you and just pay the interest on the bank loan without ever interrupting the bank. Okay? This was the issue when the government said everybody gets forbearances. Woo! And the servicers were like, we will be bankrupt in 90 days because we can't cover the interest on the notes. Who's going to pay the interest? And they were like, we'll figure it out. Mm-hmm. And then the banks were like, no, seriously, we're going under. Okay? So a loan modification is with the bank. You're modifying the note with the bank. Okay? That's what's changing. Again, if they can negotiate a loan modification, they can contact their bank directly to do that. Now, loan modifications right now, you're not seeing them yet. Right? That was back when, and this is where we're saying like what's very different today than what happened in 2009. In 2009, our interest rates were higher, 6.5 to 7.5, depending kind of that year. It was going up during that year. 2006, 2007, 2008, the interest rates were going up. And then they gave you a 2% rate in a loan mod. Right? A 2% interest rate on a loan mod. So all of a sudden your payment went from $3,400 to $2,000. Like that's how my client got a $700 payment. Right? She owed like $330,000, and then she had a $75,000 second because she did an 80-20 on this house when she bought it. They waived. There for a minute, they were forgiving second mortgages. So they waived her second mortgage, whoosh, and then loan modded her first mortgage to 2%, and her payment was $700, $800. right? That doesn't, I don't think that's going to happen again. But here's the difference now is they can't take the rates down. They're not going to take somebody from 2.8, 3.5 and bring them to 1, right? Not when the current interest rates environment's the way it is. So they've lost a tool in their toolbox to help homeowners. Now, again, I say this. They do crazy stuff that they've never done before. I mean, there was a period in time when Japan was in really bad economics where they actually did negative interest rates. So they almost paid you to buy houses. So they could do that. They could go negative. I don't know if they would.
They
Okay.
also took some of the modifications on FHA out to 40 years.
Yeah. I've heard them talk about that recently
Yeah.
to bring payments down, extending the term. Boy, could you imagine what that would do to people? We better live a long time. Okay, refinance. Now, I know this one that sounds dumb, like you're thinking, refinance, what are you talking about? If the borrower's credit has not been damaged too bad, okay, or they have a ton of equity, they may be able to refinance their existing mortgage. It depends how quick you catch it, okay? So in some instances, I had one just a couple years ago. It was in Lakewood. One of the agents in my office, she was door knocking foreclosure. She door knocks the door. 78-year-old man answers the door. She says, "Do you know you're in foreclosure?" He says, "No, I don't know what you're talking about." And he had been in foreclosure for a while. Like, it was kind of, the sale date was coming up, right? And he says, "No, I've been getting scammed, and you're probably just trying to scam me." And she's like, "No, look, I'm just a real estate agent. I'm just trying to help you." So his servicer changed from Wells Fargo to Mr. Cooper. He's 78. He's like, "I'm not making a payment to Mr. Cooper." That's pretty logical, right? He's like, "I'm not doing this." We're like, he's 2 weeks out from his sale date. 2 weeks out. So agent comes back in. She's like, "I don't know what to do. I'm really worried about this guy. He owed like 175 on the house. It was probably worth about 500. I said, "You need to go explain to him how to file an intent to cure. We need to start there. And then we need to get the house on the market and find out if he has a relative that we can talk to that has a little bit better understanding." So she goes back, talks to him, gets the son on the phone. Son's like, "What? My dad's in foreclosure?" And she's like, "Yeah. He hasn't been making his payment because it's Mr. Cooper. He thinks it's a fraudulent thing. He's been mailing his payment to Wells Fargo. They mail it back. So he hasn't made payments in a year." So his son's like, "He's got to move here. We've been trying to get him to move here." And I'm like, "Well, we got 2 weeks and he owes," I forgot, a big chunk of money, right? Big chunk of money. And they're like, "We don't have the money. We don't have the interest, whatever, to pay it." So I said, "Okay, here's what we're going to do. We're going to find a hard money lender to lend him the full balance plus late fees at 12% interest for 120 days. That's going to give us time to clean the house up, get it ready, get it sold so he can walk away with his equity and get moved." Picked up the phone, called a couple hard money guys. Boom, no questions asked. They were like, "Oh yeah, he's way under 50%. I think they loaned him 50% of value, put 100 grand in his pocket. He was able to go cure his default, got the house ready, put it on the market, sold the house, and he moved in with his kids in Tennessee." Okay, so that's a refinance. It's not a great refinance. It's not 7%, but it prevented him from losing his house. Okay, and there are hard money lenders that will lend on this stuff all the time. Like, they're not going to be afraid of that. In fact, they'll probably want you to default. Yeah, watch your terms. Some of them want you to default, but okay, bankruptcy. Filing a bankruptcy will halt the foreclosure process and allows time to reorganize the homeowner's debts. I'll tell you what, in this case, if he wasn't able to get hard money, that's exactly what our next call was going to be, as I was going to call a foreclosure attorney or a bankruptcy attorney and say, this gentleman needs to file Chapter 7. It would cost about $500 to get it started. He could afford $500. He'd file Chapter 7 or 13, doesn't matter. That would halt the foreclosure and give us time to sell it. Okay, we would get permission through the trustee or through the bankruptcy trustee. We get permission from the trustee to sell the property. We just explained to him, like, "Look, we can't take this old man's house. Like, this is crazy." Okay, so But understand, it will not prevent them from being forced to sell, because if they do file a bankruptcy, the trustee has the right to decide if that asset has to get sold or not. Okay, now Colorado has a homestead exemption for a certain percentage. If their equity's under $75,000 per person, so $150 per couple, they can use that as a buffer. But I've seen trustees force sales even when that was questionable. So yeah, it's a risky one. You don't just run to that. And the bankruptcy attorneys, they like doing bankruptcies. They will always say the bankruptcy is the right answer. They never say anything's not that. They're like, oh yeah, bankruptcy is the right answer. You're like, well, what if we borrow the money over here? No, we should do bankruptcy. Okay? So another reason that this is a really important tool for prospecting is there is a lot of bankruptcies attorneys. Okay? There is a lot of real estate agents that don't know anything about bankruptcies. They love agents that understand bankruptcies. And they will refer you. They will refer you a lot. Now here's the other thing. It's illegal for an attorney to pursue a foreclosure. They need you. They need you bad, right? You can be a huge value to a bankruptcy attorney because you can go meet all the people in foreclosure, show them bankruptcy is an option, make the introduction, and then they'll reciprocate by referring you to. I have a friend that does like 75 deals a year. She's in Colorado Springs, all bankruptcy attorneys. But she has a newsletter that explains her knowledge of bankruptcy that she mails not to clients, to bankruptcy attorneys. But you can reverse prospect them. You could go out and prospect people in foreclosure, refer them to a bankruptcy attorney. Just make sure they're a good attorney. You know, they're not. It's not that they're unethical. They just know their lane, and they will push for the bankruptcy. Okay, number 7. Place the home on the MLS. Okay? Notice how this is number 7. Because they think we're real estate agents and we only want to get paid. Our last option, if we can't do any of these other 6, our last option is to sell the house. Now, if you have enough equity, we're going to put the house up for sale. Now, remember, if they're one payment behind, you have to use the contract to buy and sell Foreclosure Protection Act contract unless what? Where's my real estate nerds? It's a short sale. Why do we not use the Foreclosure Protection Act contract when it's a short sale? It is, but it's behind in payments. So anytime, it is though. It can be. You can be negotiating a short sale while it's in foreclosure. And while they're behind on payments. And they won't negotiate a short sale if you're not behind on payments. Usually. I have done one where they weren't behind on payments, but it was like a really extreme situation. The reason is because the Foreclosure Protection Act contract, okay, gives the seller the right to pull the contract prior to closing. That's the difference. This contract says the seller has the right, if they have the ability to cure their sale, to withdraw their contract. Now, why do you think that they created that clause?
Because the sellers don't have an out in a normal buy-sell contract. They just
Yeah. And who's their buyer? Somebody who's unscrupulous, investor trying to take advantage of them, or an unethical real estate agent who's not acting in their best interest, right? They're not telling them that they can do a forbearance, not telling them that they can do a loan modification, not telling them that they have other options. And then all of a sudden they talk to an attorney, they talk to another real estate agent, they talk to a friend that says, did you try this? And they find out, oh my gosh, I can keep my house, but I'm in this contract to sell. I want to keep my house. I don't want to sell. Now, what does the real estate commission want to do? Protect the homeowner. Protect homeownership. Right? So the real estate commission said, no, we're not doing this. And they modified the contract to give them an out. Says they can pull it. Now, it doesn't happen often. It does happen. And if you're the listing agent or the buyer's agent, it sucks. Because you're like, if you're the listing agent, you're kind of like, okay, I get it. Like, I want you to keep your house. Like, but this is why you have to do volume, right? Like, this is why you're not going to survive in this business if you're doing 5 deals a year. Like, you got to be cranking deals because not all of them are going to close. Okay, so short sale. If the mortgage is greater than the current market value, or if the mortgage plus late fees, attorney's fees, if the property's vacant and the bank went in and secured the property and boarded it up and winterized it, those fees get added to it. Okay, all kinds of fees get added to these things. If it's greater than the final sales price, then you have to negotiate a short sale, a lesser payoff to the bank than what's due to them. Okay. Now, and I have a whole nother class on this. It's called Short Sale 101, where I show you like the percentages and that they'll accept. Because there is a formula. It's not perfect, but it's usually pretty good. Like how hard you can push, and you know when you're pushing too hard, right? Now, in a foreclosure situation, in the listing agreement, you use the short sale addendum from your listing. Okay, that's really important. And what the short sale addendum does is it basically just spells out to the homeowner that all the things that you're going to say normally, which is you have other options than a short sale, right? You might end up in a short sale with a deficiency, and the bank may come after you for that deficiency. So again, that's ended in 2014, where they were waiving the deficiency on principal residences. Now, again, Colorado's full recourse state. So if you default on your mortgage and there's a $50,000 balance, the bank could come after you. Now, I'm going to share with you guys how to make this really easy. You heard them say earlier that I created an app. The truth is I'm not smart enough to create an app. I got approached by a tech company who built this app for a couple other sales forces. So one of which is Legal Shield. This is what they built. So they built this amazing prospecting tool that allows you to have all of your resources in hand. So one of the challenges that you face, right, is I teach all this stuff in this class. We talk about the scripting, we talk about the resources, all this stuff, and you leave and you're like, oh man, that was great. I learned this stuff. I have it in a PDF on my hard drive somewhere on my computer. And then you're at a dinner party and somebody says, oh my gosh, my daughter, she's behind on payments. And you're like, oh, I got the 7 options. When I get home tonight, I'll send them to you. And I always thought because I prospected FSBOs, foreclosures, for sale by owners, neighborhood, SOI, past clients, all those things, right? Remember my knuckle. It's all about having that resource available where you're giving something in exchange for their contact info, right? Oh, I got this great video I want to share with you about exactly what you're talking about. Can I share it with you? I have this PDF of your 7 options that you have when you're in foreclosure. You could share it with your daughter. Let me text this to you. So here's how this works. Let's assume you attended an open house, and in the open house, somebody from your neighborhood came in and viewed the home because they're thinking about selling in the future. Now, you want to have an opportunity to educate them and to create curiosity so they consider you as their agent. So start by going to your resource section in your Trio app. Click on Home Sellers, Neighborhood, Connect. Now, we're going to invite them to fill out a 1-minute survey. The survey is specifically designed to ask them questions that are going to open up more curiosity about the home selling situation. If you're sending it to for sale by owners, the questions are going to be specific to the needs of a for sale by owner. Expireds and first-time buyers and move-up buyers. Each survey is customized for their specific situation. Here is an example of our neighborhood survey. Just simply says, can I ask you a quick favor? Would you be so kind to give us the answers to some basic questions below? Before they click submit, we ask them to fill out their information, their first name, last name, email address, phone number, and in some cases, we will ask for the address depending on the lead source. The great thing about the Trio app is as soon as they respond to this, you're going to be notified in both the Trio app and by email. You'll get an opportunity to review their survey answers and to look for ways to educate them or support them to help them get them what they want. For additional help on this, you can see the specific coaching tips for the specific type of seller or buyer you're dealing with. And lastly, you have an opportunity to send them an intro video. Each video is customized for the specific type of client we're reaching out to. For neighborhoods, we have a neighborhood intro video that says 10 things you should do before you even consider selling your home. These videos begin with removing clutter, cleaning your home, freshening up the front yard, touch up the paint and the woodwork, install new caulk and fresh grout, change the furnace filter and wipe down the utilities, wipe down doors and polish door handles, talk to a CPA, estimate your net proceeds and get qualified, and lastly, hire the right agent. At the end of the video, they're going to be asked to contact the agent that sent them this video. If you filled out your Calendly account, they'll actually be able to schedule a meeting with you directly through your Calendly. Otherwise, they will be prompted with your phone number and email address to contact you directly. Let's take a look at how the results will show up. From the task screen, you'll see at the top the notification section. Click there. Then you'll see the responses to your surveys or if somebody had watched your video.
That's it. Just a little teaser so you see how it works. So I was doing this last night. Door knocked 35 doors. 6 people. I sent them either my card or a video, right? So it's just a real simple card that's like a contact card. You can send from your phone, and somebody says, "Do you have a card?" I never have a card. I never want a card because if I give them my card, they're never going to call me, right? That's a brush off. That's literally an objection. So it's, you know what? Yeah, I do. My card is on my phone. Can I send you my contact card through my phone? What's your number? And by the way, I'm going to attach this little video here that might be helpful for your situation. Just literally click on the video next to it. Text, type in their information, bam, and you wait to hear their phone ding. If they give you a number and it doesn't ding, you go, check your phone and make sure you got it, right? Seriously, that's what I do. I go, make sure you got it. So last night, 35 doors, inviting them to an event. 6 people, I got their contact information. Got 1 appointment tonight at 5:15. Okay? Now, the appointment was lucky, I will say, because he was like, "Oh, yeah, I was just thinking about something." I'm like, "Oh, awesome." Now, he's probably about a year out, but I'm still going to go tonight and explain to him the process. I don't understand selling. I don't understand how it works and who pays commissions. And I'm like, I'll explain all that to you. So 5:15 tonight. So that's pretty good. But now I have the contact information for these 6 people, and I can put them into my drip. I can put them onto my newsletter. So it's a very effective prospecting app, and in it is all the coachings built in. So like this class that I taught you today, there's videos for pre-foreclosure. The 7 options PDF is in there, so you can literally say to somebody, "Hey, like literally, you're door knocking. Hi, I'm with Keller Williams. The reason I'm here today is your house showed up as a foreclosure on the county website, and Keller Williams is always about impacting home ownership and making sure that we're maintaining home ownership in our neighborhoods. And I just wanted to just lend a hand and answer any questions that you might have regarding foreclosure right now. Just shut up. Let them talk. Oh, we got to figure it out, whatever. Some people are super nice. Like I had this big biker dude, scary looking dude, motorcycle in the living room. I was like sweating beads, right? And he was like super nice. But then I can go to my app and say, "Hey, why don't I do this? I'm going to send you a PDF of your 7 options. Can we schedule time that we can sit down? Or let me send you this video of things you should know prior to being in foreclosure if you're behind on payments." And there's a video in there for that. Click on it. What's your phone number? Boom, boom, boom. What's your name? Your email? Whatever they're willing to give you. And here's how you know they're legit. No, this is how I spell my name. Like when they're like spelling their name, it's legit, right? Send it to them. Now you grab their contact information. So the whole tool is really just designed to give you that layer behind of depthness in your prospecting, right? Like there's systems in there for first-time buyers, move-up buyers, neighborhoods, for sale by owners, expireds, open houses, investors, like all that stuff. Rent-to-buy calculators. You're meeting with a buyer or somebody who's 35 years old. I'm thinking about buying a house. I don't know if it makes sense. You know what? I got this really convenient rent-to-buy calculator. Can I just send it to you real quick? Sure. Send it over. What's your contact info? The other thing you can do is you can upload your own resources into it, which is pretty slick. And you can upload other people like your lender, your preferred vendors, and you can send them all that contact information through the app too.